Aside from Mother's Day celebrations and birthday parties this weekend, I spent actually quite a bit of time speaking to some of you guys and some of the Clubhouse members on the phone, and we talked about the lack of volatility out there in the stock market and what there might be to do. Well, last week I made a video on what I called 2 trades in 2 minutes. And so this week I want to do a little bit of the same here, starting off the new week with 2 things that I'm looking at. I'm still long straddles in the S&P 500, meaning I'm long at the money calls and puts, hoping that at some point in the not too distant future, the implied volatility will start to tick up a little bit, and that might be able to make that trade profitable. So let's do 2 minutes, 2 trades. Let's go.
Well, last week we saw retailers come in and really get decimated. Stocks like JCPenney, Sears, Target, Kohl's, even Nordstrom really started to falter even further than they had been for some time, and I don't think that's going to end. The question is really, is there a trade to do in some of these stocks that are already very beaten up? If you look at some of the stocks like a JCPenney, I mean, the stock's now trading at $4.50, and I'm not really quite sure on the downside you want to short something like this. So I'm actually considering specifically another stock that might be able to still have some further downside. Quickly, before we look at that stock though, the XRT, which represents some of the retail segment, of course this also will include, broadly speaking, something like an Amazon.com, which is holding very strongly. So it's a little bit of a silly bet in my eye to short the broader retail segment, because it does include things that actually do work. But if you look at the retailers last week, the XRT ETF, which represents that segment, it had a quite a nasty outside week last week, so maybe there is a little bit further downside here. But I'm specifically looking at Kohl's. The stock is KSS is a ticker symbol, and if you look at it, for one, it's not a $4 stock, it's a 36 or a 36.50 stock, so that's a little better. Now I understand the stock has a bit of a different model. It's not. It's more of a discounter than something like a Sears or a JCPenney for that in that sense, which is probably why it's holding up a little bit better in terms of at least the absolute price level of stock price. But I do think now the stock has given us a fairly good sign last week that it might want to break down further. It broke below this horizontal or this diagonal line of support. I do think next stop here could be the low 30s. So I'm looking at potentially opening up a July put spread in KSS, an at-the-money put spread, which means I would look to buy something like a 37.50 or potentially even just a 35 strike put, and sell against that a 32.50 strike put. I have to look exactly where the stock opens for trading this week, but that's one thing I am looking at. The other stock I'm still looking at here is shares of Twitter. You can see shares of Twitter had quite a bump over the past few weeks. If you make this a weekly chart, you'll see this even nicer. We've had a nice breakout out of this falling wedge pattern, which are some of my favorite patterns from a pure technical perspective, and I like the fact that its stock has been able to break out very meaningfully out of that. If we zoom in a little bit closer on the daily chart, you can see over the past few days or so, the stock has now been consolidating, which is all in all a constructive move here in this blue box. Personally, I'm looking to see if the stock might be able to get above 1880 or so on a daily closing basis. I'm in full disclosure already long some call spreads in Twitter in small size, just to kind of dabble with it. Specifically, just so you know, I'm long the 1920 call spread using September options, so small position, just a bit of a dabble in it. But I still like Twitter here on a potential breakout. Again, it does have to break out first for me to start adding to it, and certainly if it starts breaking lower, I will get out of it. But I still like Twitter sort of from multi-week, maybe multi-month perspective. What it's done here, I think this move here was constructive, and so I still like this towards its price target of $20, again, upon a breakout above $18.80. The other thing I did this weekend, by the way, I continued working on my Kickstarter course. That Kickstarter course, great for beginners, great for people who want to get back to the basics. One of the reasons why Michael Jordan got so good at basketball is because he continued to practice the basics. So in this course, I go over all the basics, all the stuff that you need that you can really grow with. A lot of people may have done this for many years, but they have actually never learned the basics that's really, really important to understand, the fundamental trading strategies that you need in order to make money in the markets. Jam-packed, comes with a special scanner as well that we're working on. So I'm excited to launch that course in June. I'll see you guys in the next video.